Hi everyone, welcome to the FortisPay and how we're going to talk about if you're overpaying for credit card processing. My name is Nirav Shah, and I am the president of global operations, specifically in the hospitality division. Samir and myself are the founders of Fortis, and Samir will say a few words.
Hi, good afternoon, everyone. My name is Samir Pimputkar. I am the EVP of Business Development here for FortisPay. Super excited to go into a quick casual conversation with Nirav in regards to credit card processing fees, some of the way transactions are ran, as well as some of the things to look out for in the industry, amongst many other things as well.
We're gonna go over quick, 4 topics. The first thing is how does credit card processing work? And then common rates and pricing programs in the hospitality industry, unique needs for the payment processing within hospitality, and how to tell if you're overpaying for your credit card processing in the lodging space. At the end, we'll have a few closing remarks, and also we'll have questions and answers. And if there's any questions you have, there's a question mark button on the top right-hand corner of your screen. You can just enter your question, and we'll respond to those at the end of the seminar.
So Nirav, I think both of us being in this industry, we always kind of get this question: what is credit card processing? How does it essentially work, and who are the players throughout the transaction cycle? If you could shed a little bit of color on that, I think that would be beneficial to the audience.
Sure, I'll go through a quick kind of flow of how processing works and explain where some of the fees fall into place. So as a card holder, a guest, you swipe your card, or you have a card on file at your hotel. It goes to the hotel, sends the credit card information to us as the processor. Then what we do, we send it over to the card brand as well as the issuing bank, and they'll give us a response if it's declined or authorized, and then it comes back the opposite ways, and at the hotel's PMS, it's going to give you approved or a declined transaction. But what everyone's got to remember is when we're talking about pricing is that most of the fees that anyone's paying within payments are always from the issuing bank, and the reason that is that that's how they can afford to give you rewards, right? So what happens if I go to Walmart, let's say, and I get 2% back for using my card at Walmart? Well, Walmart's paying 2.3%, and that 2% is being paid back to the cardholder from the cardholder's bank. The cardholder's bank makes the most of that profit, and the rest is left for the card brands and us as processors.
Got it. So the annual complimentary toaster that I receive from my credit card companies is there's a reason for it. Okay.
Oh yeah, they make more. They want you to spend money, and that's why they give you incentives to spend.
Perfect. Well, I think understanding the different types of transactions and the transaction flow, you commonly see in the lodging space with pre-authorizations as well as authorizations when the card is actually present, when the guest actually checks in, as well as when they're making their reservations, upon even checkout as well. I think it's important to understand the different types of transactions and that card present versus card not present.
Samir, it's most people don't know this, but if we set you up properly as a processor, so it's us or any of our competitors, if they set you up on a lodging platform, you're getting the same rate as card present and card not present, as long as you set up properly. So if you look at, you could actually just Google it and go to the interchange guidebook, and it'll say as a lodging class code, or MCC as we call it, the same rate for card present versus card not present. You just gotta be set up properly.
So very similar to the car rental space, essentially.
Correct. Yeah.
Okay, great. So, to give a little insight on some of the current pricing models that you see out there, understanding credit card processing fees is one of the most difficult parts of being a business owner, understanding the difference between interchange plus rates versus flat rates, and all the pricing models can be, usually enough to somewhat pull your hair out. When you look at the flat rate model, it's increasingly, kind of popular price for credit card processing. We see the most prevalent version of flat rate processing, where a company charges its clients based on a fixed percentage of the volume. The benefits of this pricing model are typically very simple. All the transaction costs and fees are the same across all card types. One of the downfalls to this, I think, is the lack of transparency. When you look at the simplicity and the predictability of a flat rate pricing, usually it comes at cost. And I think this is where processors hide both the interchange rate as well as the markup from the business owner. Usually this makes it impossible to understand why you're paying what you are. Since you don't know the details of what you typically are paying, it makes it more difficult to shop around and try to find out, what's the best price essentially for, your business. If you move on to, kind of what we call, the interchange plus pricing model, it's an alternative to the flat rate pricing. Similarly, the name kind of describes this type of pricing as well. You pay the interchange rate or the card brand wholesale rates plus the processor markup. The biggest difference is that your monthly credit card statements will show you the exact fees that make up these transactions. Some of the pros from interchange plus pricing is obviously transparency. While it has the potential to make your credit card statement a bit more complex than you might like, I think with interchange plus pricing, you'll always see the fees you're paying for next to each transaction. Not only does this help you ensure you're paying a fair price, but it also helps you shop around to find the best price, again, for your business. One of the negatives around interchange plus pricing is obviously complexity. The transparency, it does have its downsides. In this case, it's increased complexity, unfortunately, because each transaction has a different price associated with it, and you can't predict the exact number and type of transactions you'll get per se on a monthly basis. So your cost becomes a little bit harder to predict, but most of the time this is more than made up for by the actual cost savings. You will see, or the next model is subscription-based processing. Nirav, if you want to talk about this is kind of a big, I think, no-no in our industry to sort of stay away from. A lot of times you feel that it could be potentially a bit gimmicky.
Yeah, so subscription models, work when you have an integrated product. They charge you for the technology as well as the processing all in one, but you really don't know what you're paying for. So it should be a savings, but you got to bundle it with you got to take out the subscription fees and what that is. So typically, as hoteliers, because we do so much volume, I mean, this is a hard model to go with in lodging just because you really don't know what you're paying. It's just a subscription fee, right? So they don't break out a lot of the different rates and fees, just like, where interchange plus does. And flat rate, does it to a very, very, very small area where they just break out debit and credit, and that's it. So, it's really not we haven't seen it in the lodging space, and maybe in the future it'll be there, but today it's really not there.
Stay away, right. I think another pricing model to talk about is the last one that we have here, which is the tiered model. Credit card transactions are typically sorted into, potentially 3 tiers. You'll have your qualified tier, a mid-qualified tier, and then a non-qualified tier. Customer cards can fall into these tiers based on the type of card being used as payment, how promptly the transaction is settled, as well as, other risk factors, associated with running the transaction. The benefit to tiered pricing is that it presents rates and fees in a very simple, easy to read format. However, again, going back to the balance of simplicity and complexity, the simplicity of this pricing model makes it, I guess, a bit opaque and potentially expensive. Nirav, any benefits or downsides you see to the tiered pricing structures?
It's just not transparent. I'm trying to say, it's breaking into 3 different buckets, and there's hundreds of interchange categories. So it's just breaking those into 3 buckets, and that's it. So it's probably the most expensive, and it's the most difficult to understand, because you're getting typically 3 or 4 different rates, but they're just getting segmented into where they closely fall into, and that's it. So it's this is very difficult to look at. People like it in a sense because they understand how simple it is, just like flat rate, but it typically, could be the highest type of pricing out there.
Right. Typically ends up becomes expensive, and even when you go out to shop it, there's obviously things that can happen there as well too.
No, so Samir, I agree. So it's easy for us as a processor, if we're doing a apples to apples comparison, we like to see Interchange Plus. Because we can tell how that person's processing, and if there's any efficiencies that we could give them, we can always, us as processors, we can give them the information how to change operations and make things more efficient.
Absolutely. Good. To quickly go over some of the unique payment needs for hoteliers, our experience that we've had in the lodging space, we've seen it shift over the years, where you were seeing a lot of non-integrated products, where we were seeing a property management system with a standalone terminal, not necessarily talking or integrated. And as you're seeing more and more payments acceptance coming to the space, whether it's coming in the form of OTAs, which are the online travel agencies, now you're seeing organic growth coming from actual hotels driving traffic through social media. You're seeing more and more of an influx of really that payment acceptance and how broad it has become. But more importantly, making sure that your payment processor can carry those transactions and allow you to accept those payments and get those guests obviously into your hotels. Any thoughts there, Nirav, on like I said, all this coming into the industry as far as the different payment types and methods?
Being in the lodging space, we have to accept every type of payment acceptance, right? If it's coming from the OTAs, if it's coming from websites, that we have to, because our competitors are doing it, right? So we have to accept as many as we want. So we just got to always make sure that your processor is looking at it. And I just said earlier, how to make this the most efficient for you, and operationally as well as cost, right? There's stuff that you can always do to help with operational efficiencies with payment acceptance. It's stuff is like PCI. PCI has to be there because it's actually a protection for the merchant, because if there's a breach and if they're not PCI compliant, well, now you're talking about liability and all that, and who wants to get into that?
Yeah, which is absolutely prevalent.
Yeah. So we have to make sure that we're doing the right thing as hoteliers, and making sure that us and our guests are staying out of the PCI scope of data breaches.
Yeah, and I think, to touch on your comment about operational efficiencies, I think today too, we're not seeing the single hotel owner, right? We're seeing a hotel owner that owns multiple sites, and having the tools in place, having the ability to have real-time reporting, I think is extremely important today, especially with the efficiencies, with no-shows and chargeback, specifically around COVID and some of the state restrictions when it comes to, the travel and entertainment industry. And like you said, when it comes to PCI is a real thing, right? Breach is really a driver in a lot of industries, and we're starting to see more and more of that in the actual lodging space. As far as terminal needs, everyone understands that they require EMV today, the ability to accept chip cards. I think the idea of 5 years ago that the SMB small business owner potentially couldn't afford a piece of technology to power their business. And now today, with the likes of some of these property management systems that are out there, it's extremely affordable to have a integrated solution that does take the chip card. So I think that's extremely important. Nirav, any thoughts on that as well?
No, I agree with that. The problem that we're seeing is the brands, right? The brands are moving around who the preferred processor is, and all that. So the brands are trying to mandate where you go. And you just remember, guys, it doesn't matter where you process. As a card, as long as you're using your security standards, so whatever gateway you are, if it's Fortis or any other processor, if the brand allows you, we can do the processing. The brands are kind of limiting this because they're looking to make it, simpler and for them, but also, we all know they're, the brands and the franchises, they're always, they're looking out to make a little more money as well. So
Absolutely.
just be cognizant that when they say that, you can always get waivers. You can always ask them, listen, I would like to be with one processor where everything gives me the ability to log into one reporting system, everything, and gives me the efficiencies that I can spread across all my my entire portfolio.
Yeah, I think you said it right. Efficiencies is the best way, especially with where you see management companies positioned today, where they have different brands, different products, different services, no different than what they would actually offer to their hotel guests, right? They want to keep it consistent and be able to manage it. I think it's important now that the summer season is upon us, the spring and summer season upon us, with vaccinations starting to be distributed in masses. I think it's idealistic of us to talk about, understanding the volumes that are coming in this upcoming season. We all know that, including myself, that, being at home and not being able to travel, obviously is getting us excited about the upcoming season. So, really making sure that your payment processor understands who you are as a business owner, understands different type of seasons that are associated with your property potentially. I think that's important to make sure that that's relayed to your actual processor.
Yeah, and then we'll talk. I think a couple of slides down, further down, we're going to talk about chargebacks. But we think that there's going to be some guests using COVID as a way to kind of, say I couldn't show up, it was because of COVID, and use it as a chargeback. So, just I think we might see some increase in chargeback as well, percentages, just because of there's another reason why people can say they not comfortable or they're not happy with something.
Yep, absolutely, and we're seeing it today. We've seen an increase in some of the fraud that's been going on. Moving on, I think in each business or in every business transaction involving credit cards, processing fees always unfortunately take a bite out of the total profits. We generally see credit card processing fees to be around 2% of each purchase, depending on the typical industry type. But businesses do have some power to minimize costs by shopping around with different payment processors. They can end up receiving competitive rates that can end up saving them, significant amount of money over time. But I think really, in order to be able to shop around, it's important to be well versed in the topic at hand, and making sure that your current processor isn't really charging, quote unquote, ticky-tack fees. To that end, we've put together a couple little examples that you can see here of the fees that potentially could show up on your statement. Obviously, no one enjoys paying additional processing fees, especially if those fees are avoidable. I think searching through those merchant fees and bills and statements can be obviously time consuming, takes away from really running your business, but especially in the lodging industry, you find line items on credit card processing statements that typically just mean some type of jargon, right? And it's meant to keep you in the dark. So keep in mind that we do have here at Fortis a full proposal and analysis team on staff that could answer, any of your rate and fee questions.
Yeah, and there's some fees, that we've listed on here, like the IRS reporting fees and all that. Look, we do have to send your sales over to the IRS. That's how there's the checks and balances for them. But a lot of this other stuff, we don't, there, as Samir said, ticky-tack fees. Like, if someone's going to put you into a contract or something, just be wary, right? Because why are they putting you in a contract? If they're doing the right thing, there's no reason for a contract. It's typically if they're doing, so look at, and they also have like those, I think they're called evergreen clauses, or basically if you don't cancel within, the time frame of how long your contract is, it renews automatically and all of that. Just be careful. Just make sure, try to have, when you're shopping with somebody, not to have early termination fees, and make sure they're helping you out with your PCI compliance. That's very important, because if there's a breach, guys, listen, it's a problem.
Yeah, you almost want to feel like early termination fees are baked in for shareholders down the road, potentially.
Correct.
All right, great. So this topic, obviously everyone, I think that the hair on the back of their neck stands up when we talk about chargebacks. In its simplest form, what are chargeback fees? Simply put, it's a fee charged by the acquiring banks to cover the administrative expense that's incurred processing the chargeback. A credit card chargeback fee occurs when a cardholder or a customer disputes a previous credit card charge and wants to nullify the sale or the transaction. Essentially, the customer asks the card issuing bank to return those funds to the customer's bank. It's important to understand that there's several factors that can trigger a chargeback fee. First, someone may have stolen the customer's card and used it for a spending spree, which is a form of credit card fraud. Or like Nirav had said, with COVID, you're seeing a lot of no-shows pop up on the radar as well. When the customer found out, probably from their card issuing bank, that they likely requested that the fraudulent transaction be canceled, that's when you start to see the chargeback start to get initiated, and the correspondence between the merchant usually, starts to happen. Now, on the flip side, the chargeback may be due to friendly fraud. Believe it or not, that's a term in our industry. The customer has forgotten that they had purchased the item, and maybe they're not happy with the product, or they don't know how to return it to you, or if they may not necessarily know how to have a conversation about it. So if the customer doesn't recognize that business name as an example on their credit card statement, they may initiate a chargeback because they potentially could suspect fraud. So unfortunately, Nirav, we see it time and time again that merchants are at fault. Maybe they entered the wrong purchase information. Maybe they charged the customer twice or settled the transaction twice by accident. But either way, you can't always blame the customer for deciding to, dispute the actual charge. Fair to say, right?
No, I agree. And, it could get very expensive, because typically chargeback fees are between $10 and $50. So, as you get more of this, and they could really add up. So, my thought on this is, listen, if whichever processor you're with, every one of us have a chargeback department that push paper, but make sure your processor has a chargeback, team or mitigation team that actually helps you fight the chargeback. Or what they do is they actually just educate you, your front desk, your night auditors, your whole staff on, okay, this is how you should answer. So it could be with friendly fraud, or it could be anything. It's how to answer. And just remember, guys, I don't know if the stat, this is about a year ago, I think 30% of all chargebacks are lost just because they're not answered in time. So So make sure you have a processor that's going to help you through that processor. Everyone has a chargeback team, but they're paper pushers. Make sure your processor has a team to help you out as a merchant.
Yeah, I think understanding the benefit of having an advocate or an expert in the payment space is a must-have in this day and age, with all the digital e-commerce transactions as well as face-to-face. Being proactive as well as effective in that process is extremely important. And I agree with you. Encouraging our hotel owners to work with their processor to discuss what the best measures moving forward is extremely important today.
So this is really cool, guys. We're creating sort of a white paper, is a pocket guide to rates and fees as hoteliers. inside it, it's a full explanation and resources and tips to better understand payment processing as a hotelier. So everyone that signed up for the webinar today is going to get a copy of this. And then, whoever else listens to this outside of this webinar, they have access to it, just email us, we'll send you a copy of this. But it's a great white paper, just how it's almost like, remember those yellow books, and this is really credit card processing for the, just don't understand it. Don't get it. Like, this will make it, just let you understand it and let you be a little more at ease.
Basic, simple, easy to follow, good guide. Okay, great. Well, Nirav, if you want to.
I think we have a couple questions, right? Yeah.
Yeah.
So, lack of transparency. Samir, you did talk about, a lot of processors have lack of transparency. If we go back to the when Samir talked about having, 4 different kind of pricing models, and as we said, like Interchange Plus is truly the most transparent, because you can actually just Google the Visa and MasterCard interchange guidebooks, and it tells you what the rate is. So you can really keep your processor honest that way. And look, a lot of these people, go out for, RFP, processors being transparent. So I think that's the easiest way of doing it, and make sure you're not getting those fees, right? Those ticky-tack fees that are just add-on fees. It happens in cable, it happens on your wireless bill, but it shouldn't happen in your payments business. It should be black and white.
Yeah, and don't forget the service issue, right? Service and fees equals success. I think that's what we go by.
The next question is exact costs on different card types that are used. So I just said that you can just Google the Visa or MasterCard interchange guidebook, and there's a matrix of where the card qualifies and what type of card it is, and it'll tell you what the exact rate is, right? It could be as low as 5 basis points and up to 2.9%. It could be within there. Depends if it's debit, depends if it's credit. If it's on the credit side, is there rewards attached? Is it a preferred? Is it a platinum card? So that they all matter, because that's how the merchants, the issuing banks, are actually giving back rewards. So it's hard to understand what you're paying, but just Google it. And if you have any questions, reach out to us. We can spend 5-10 minutes with you guys, and we can kind of show you, okay, this is where this car falls and this car. But lodging, let's look at it. If it's a qualified transaction and there's no rewards attached to it, the cost on a credit card is 1.54. That's it. So you can go look at the interchange guidebook, and we can go from there. People get really frustrated that they're paying a lot more than other people around and all that. So what I would do is ask a processor to give you an apples to apples comparison, but take that with a grain of salt, because you got to make sure that that proposal is accurate. We've seen time and time again, our merchants come back to us and say, listen, this person's saying they can save 20% off the fees. And if 20%, if we know what we're making on that, and we know there's impossible to save that much. I mean, so just be cognizant to make sure you're using common sense when you're looking at proposals. And there's so much information, just by Googling it, that you can really see what you should be paying. And look, it should be around 2%. If you're it's going to matter if you're a economy hotel to a 5-star hotel. Well, the reason that rate's going to change is that typically at a 5-star hotel, you're going to get more Amex, you're going to get more higher end cards because it's more expensive, and and they give more rewards, which increases your merchant fees.
My free toaster, perfect.
Yes.
Great. I think that's
those are all the questions. Yeah. Well, listen, thank you, everybody. We would love to, if you have any additional questions, Samir and my email addresses are below. You can call our office at 248-465-9999, or just email us. A lot of you guys will have our mobile phones or whatever. Just reach out, guys. We're here as a advocate for you guys, and would love to just have some interesting conversation in merchant services.
Yeah, see how we can help. Perfect. Well, thank you, everyone. Stay safe, stay healthy, and hope to see everyone soon.
Be safe. Bye-bye.